And now it's a pleasure for me to introduce Oliver Völkel. Oliver wasn't only one of my best doctoral candidates, he's also one of the best in the crypto ecosystem. And Oliver is going to tell us something how the European Union answers to the stablecoin challenge.
Thank you so much. I think I will use this microphone simply because I can also then hold on to my notes a little bit better. So we've heard very interesting presentations on stablecoins in general. I think that was the interesting part of the event today, and now we come to the boring part of how this is currently legally implemented on an EU level. I know that we do not have too much time left before we will start our break, so I will try to be a bit more concise than I intended to. I hope you'll find it interesting. What I want to cover is basically what are stablecoins under MiCA, who may issue them, talk a little bit about volume thresholds, because I think that's really important as it limits what you can do before you're considered significant, and even more stringent rules apply. Talk a little bit about the redemption rights, and then have a couple of specific questions that I've seen come up in practice. So what are stablecoins under MiCA? MiCA actually knows two separate types of stablecoins. That's the asset reference tokens if you want to make reference to any asset, and that's e-money tokens if you want to make reference to one specific currency. Could be the euro, could be US dollars, could be any currency worldwide. And the definition is pretty, it's intended as a catch-all, right? So its definition is basically a type of crypto asset that purports to maintain a stable value. And when it comes to the e-money tokens, a stable value in relation to a official currency, to one single official currency. So my token that claims to be euro stable is a stable coin. And it's a stable coin whether or not it in reality has any backing mechanism. Just the mere claim of it being stable makes it a stable coin. So, which actually broadens the scope of application quite dramatically. Interestingly also, all e-money tokens are considered to be e-money as well, which has implications as to who may issue e-money tokens. And what's interesting to note also is that MiCA has some specific rules for e-money token issuers that go beyond the general regime. And now I should perhaps also introduce this general regime, the general regime being the E-Money Act, which is actually quite old, ancient in terms of digital age. E-money issuance has been around for 15 or so years since the first e-money directive came into force. And this is still the basis also for the issuance of e-money tokens. If you want to issue e-money tokens, you either need to be a credit institution, CERHA credit institution, or you need to be an e-money institute. And MiCA then only adds on top of that layer a couple of additional rules. So how do e-money tokens differ from other tokens? What I mean by that is other tokens that MiCA knows. They're basically a subcategory of crypto asset. You have a definition of what a crypto asset is, and then there's a sub-definition of what e-money tokens is. I pointed it out earlier. It differs from the asset reference token because it's not, relating to, a share or a piece of gold or gemstones, but rather it relates to one specific currency. It differs from utility tokens in that really the main purpose is to hold its steady value, and it can be redeemed with anybody, while your typical utility token would be issued and redeemed by one single entity. Also perhaps noteworthy, if you want to basically issue your own company currency, you don't need to go the route of issuing e-money tokens. You could simply issue a utility token which can be used to only purchase your goods and your services. Right. Who may issue e-money tokens? It's either credit institutions licensed in the European Union, so you need to have your boots on the ground, so to speak. You cannot issue euro-based or any other e-money token from outside of Europe. You need to have an institute in Europe. Or you are simply an authorized e-money institution. You do not need necessarily, Unfortunately, I mean, there would be a huge other array of potential issuers. Your regular crypto asset service provider, for example, is not allowed to issue crypto stablecoins, is not allowed to issue e-money tokens. You need to be a bank or an EMI. In terms of European integration, we do have member states, each of which have their own regulators. If you want to do your EMI issuing from outside of Europe, what you need to do first is select a market. I think Austria is pretty, would come to mind as one of the most interesting markets, not the least, since we heard that we are even developing parts of the integration of the euro stablecoin in Vienna, which is really remarkable. So after you have decided on your home member state, you are applying for the license. I'll go into a little bit what is required on the next slides. Hopefully you'll be able to obtain your license, and then you can passport your license that you hold in one member state to all of the other EU member states if you like, or you can decide to choose multiple jurisdictions where you try to fragment the European market with multiple licenses. Would also be a possibility if you wanted to go about it that way. Right, so one license, the whole of the European Union, is your playground, so to speak. So what are the conditions to issue e-money tokens? There are certain regulatory preconditions. You must hold the EMI license or banking license. You must comply with specific obligations that are set forth in Title 4 of MiCA. This, I'll only give you the gist. So it basically requires you to maintain a reserve. We heard today that the very intriguing part of becoming a stablecoin issuer, or of becoming a central bank, if you like, is to receive funds basically for free because you're not paying interest, and then being able to invest those assets, invest those funds, generate a profit, and basically be able to keep that profit. Sounds like a good business model, invites fraud and misconduct. So that's why there's very stringent rules on how you can invest those funds that you receive. So there's rules on how you redeem your your e-money tokens. There's rules on how you can invest, and I think I have a slide, but I'll say a couple of words already here. What you're allowed to do basically is receive all the funds on your account, even obtain a central bank account for that matter in the near future, and then invest it in highly liquid assets, safe, highly liquid assets. Assets which you are able to get rid of very, very quickly on the capital markets, which have zero to very little counterparty credit and market risk, which you are able to liquidate very rapidly, so that in case everybody would return their e-money tokens to you, you would be effectively able to do so. There's an interest ban, so even if you wanted to, you are not allowed to pay interest on any deposits, it's not the correct term, on any funds you receive in exchange for e-money tokens. And this interest ban is really, really far-reaching. So it's not just a statement that you're not allowed to pay interest, it's a statement that you're not allowed to pay interest, and also you're not allowed to grant any benefits or grant subsidies or reduce prices, or so basically the idea is to make this circumvention proof, so nobody tries funny stuff. And lastly, you need to provide a white paper. Every issuer of a crypto asset under European rules, if they want to offer in Europe, need to provide a white paper. Interestingly enough, You cannot claim that your stablecoin, which is euro denominated, is actually only issued, let's say, in the US. There's a specific clause in MiCA that says whenever you're issuing a euro-backed stablecoin or a euro-denominated stablecoin, it's automatically considered to be issued in Europe. So you're automatically under the rules of MiCA, and you automatically need to provide a white paper. What's the contents of the white paper? I'm not going to bore you with too much detail, but it's basically a description of who's the issuer, what's the redemption mechanism, so how are you going to return to the actual euros, what risks are associated, and then a couple of standardized texts, such as stablecoins are not covered by any investor protection scheme, for example, unlike bank deposits. Right, what else? Marketing and disclosure. You can market your stablecoin. You just need to make sure that whatever is put into the marketing material is consistent with what is in the white paper. And this is a really, this is not just a guideline, yeah, make sure that it doesn't conflict or so. It's really just use what is in the white paper. Don't write any text other than what is in the white paper. Otherwise, you will, this will get investigated by the regulators. I've not seen it with e-money tokens, but I've seen it with financial instruments. Right, you must make clear that your e-money token, your stablecoin, is not an investment product. You cannot claim any returns, and you cannot claim it is safer or more secure than any other form of holding money. There's the strong interest prohibition clause, right, which actually extends not only to the issuer of the stablecoin, it also extends to every crypto asset service provider who holds stablecoins. Which then, has fun implications. So, for example, what if, as an EMI, it's clear, if I hold stable coins for a customer, I cannot pay out interest. Also, the issuer cannot pay out interest. Also, the crypto as a service provider cannot pay out interest. But what about the bank? Maybe the bank can do that since it's covered by its other licenses, and e-money. So, I would have to say, e-money tokens are considered e-money, and e-money is considered funds. And so a bank could open a bank account holding e-money tokens, potentially offering e-money token denominated accounts. Right, then let's move on to our significant e-money tokens. What does significant even mean? So first of all, okay, so there's the regular e-money tokens. If you want to issue them, you will from the start be considered a regular e-money token, and there's obligations you need to comply with. Once you pass certain thresholds, or better, once the funds in circulation or the transaction volume or the number of transactions reaches a certain threshold, you can become a significant e-money token. The good news is this is not an automatic switch. It's rather something that EBA can decide to classify you on, which will put you into a much more stringent rule of or set of rules. And so what are these thresholds? It's once you reach more than 10 million users, once your reserve of assets or the capitalization is more than 5 billion, or your average daily trading volume reaches 500 million. And actually it's 2 out of 3. So when 2 out of these 3 conditions are met, then you will be considered a significant e-money token. What does it mean? You can be classified as a significant e-money token issuer. There's more stringent own fund requirements. You have stricter governance and risk management, including liquidity and stress testing. And you are then directly overseen by the European Banking Association, by EBA. And I mean, the only thing that I wanted to note here is these figures are not that large, right? I mean, 5 billion in market capitalization is not that much. 10 million holders perhaps is a threshold, that needs to be reached at some point, but it's not like, if you think of the European market as a whole, how large it is, and these figures are not limited to the European market, it's worldwide. Once you have more than 10 million users and 5 billion in market capitalization, you're in. Reserve of assets. I said here, one-to-one backing is not a slogan, it's a legal obligation, and that's really, really true. When you look at what other regulation we have currently in place, the most similar thing that comes to mind would be money market funds, which are also heavily regulated and require investments into specific, highly liquid and safe assets. With minimal market risk, which can be sold off very quickly. And and we do have a delegated regulation, which more or less puts the same rules or very similar rules that we have for money market funds, which imports them for issuers of e-money tokens. Also interesting, the funds or basically the currency your e-money token is issued determines the currency your reserve funds must be in. So if you're USD denominated, you cannot invest in Euro bonds. If it's Euro denominated, you cannot invest in USD bonds, for example. Right. So, since we do not have too much time left, I'm just seeing what would be really important here to tell you about. But actually, I think I covered this all on my last slide. Yeah, I mean, reporting. One of the major additional obligations, which, when you look at how e-money institutions and also banks, of course, are treated today by the regulation, or what they need to comply with, is a lot of reporting. And the same is true for e-money tokens. So what do I mean by reporting? Reporting the trading the volume of use, for example. And one would imagine that if you put something on a blockchain and it's publicly available, that you could actually lower your reporting obligation. In my opinion, quite the contrary is true, because in addition to everything that the e-money Act or the e-money directive prescribes in terms of reporting obligation, MiCA comes up with something in addition. At least, yeah, I mean, some of the regulatory technical standards that are being developed as delegated regulations are not yet adopted, so we'll see what the final product is going to look like. There's going to be templates, number of holders, composition of the reserve, transaction volume, own funds, key metrics. It's going to be something, yeah, an additional obligation to what you know as a simple, under quotation marks, as a simple e-money issuer. Redemption. Do holders really get their funds back? The idea is I provide funds to the e-money token issuer, and at some point I would like to have them back. And if you look at some of the American international stablecoin issuers, what they are doing is they issue stablecoins to intermediaries, so to speak, to the exchanges, or usually you can purchase them directly also. It's just when you want to return, then you usually have to go through intermediaries. And I think the rationale behind this is it would just be too much of a hassle to deal with every single request, and so we want to funnel that through specific bottlenecks and then only repay larger quantities. This is actually not going to work under EU legislation. I was of the opinion for some time that we could make this work. I don't think it's going to work. Everybody who holds e-money tokens would be able to redeem them, save for AML, CFT compliance constraints. So if you as the e-money institution would have your doubts about the origin of the funds in terms of the transaction, how a specific person came to receive them, then there might not be such an obligation, but generally you have to redeem in cash or credit transfer. You cannot issue e-money. Right. Fees are only permitted to a very limited extent, which makes the business a little bit less interesting from that perspective. Obviously, the whole upside of investing, the reserve of asset remains. Right. And also, MiCA requires you to have a plan in place for crisis situations. So not only should it be able in your regular, maintain or be able to, redeem the regular amounts that you expect in the regular course of business, but you need to have crisis scenarios. You need to make sure that you are prepared. You need to have redemption plans and recovery plans. Fortunately, I just noticed that when you are obtaining your license, you don't have to send them right away. MiCA gives you 6 months time upon your license to then follow up and send this along to the regulator only afterwards. Right, and then, what's on this slide should actually be self-evident, but I think it's important to stress that what we think of as a stablecoin is actually codified now. So when you want to return your e-money token, it's not sufficient for the issuer to then return 90 cents on the euro. Rather, they have to redeem it at par value in the respective currency. So if it's a euro stablecoin, you have to receive euro, and for any holder who presents it. There's no caps, there's no selective redemption allowed. You need to comply with every redemption request. Right, and that's what I said earlier on this page. There are certain circumstances where you can delay or refuse. AML, CFT suspicion, sanction compliance, obviously, suspicious transactions, fraud or legal disputes. Right, but what does it mean for your product design? In theory, you must be able to handle both very small redemptions and very large redemptions, and this in potentially, at least the European jurisdictions with multiple payment possibilities, and potentially also for holders from other parts of the world. So can one issuer of stablecoins issue multiple stablecoins? This has been under debate. There is actually nothing in MiCA that would prevent one stablecoin issuer from offering its services, for example, as a white label solution, so that a company could come to this white label provider and say, we would like to issue our own branded stablecoin. The important part is this stablecoin is then always issued by the single licensed entity. So what's not really possible is that you extend your license as an umbrella to others to do issuing activity. It would always be this one single entity who issues multiple stablecoins. So there's only one regulated party in such a case. Right. Which means, obviously, that there's this one regulated party remains responsible for all the obligations. You can build a business model upon that. You can say, well, you give me your brand name, you grant me use of your brand name, I'll grant you, use of the technology and of the license, but and then I would assume that there's going to be some sort of revenue split in terms of the invested assets, because while MiCA prevents the interest payment to the purchaser of the stablecoin, it does not say anything about what can be or how revenue can be split among business partners who are not holding the stablecoin. So this interest payment prohibition really only matters in the distribution side of the business model. Right. How do EMT issuers get a bank account? I wanted to expand a little bit on that, but since Wolfgang told us already, in Europe, in the very near future, EMIs will be able to gain central bank access, which is, I think, what how this came about is, I think, because in practice it was really, really difficult for any payment service provider or any EMI to get a bank partner. Heightened supervisory costs for that partner, and obviously you're providing a vital service for a potential competitor. So why would any bank choose to do that? And it has been a hassle. It's still a hassle. It's really, really difficult to get banking for such players. So it's really good news that they'll be able to get the same accounts that regular banks have, for example. Right. Since we're in Austria, at least want to say one or two words about Austria specifics. MiCA is a regulation. It applies in Europe independently of any transposing act. However, there are certain things that need to be defined. For example, who your supervisory authority is going to be, or fines, for example. In Austria, these details are laid down in the MiCA Verordnungsvollzugsgesetz, the MiCA Implementation Act. And it grants, it covers what you would expect: who's the responsible authority, who's the process, what's the process, what's the fees for oversight, what are potential action that the FMA in Austria can take. Just note the three here. There's even possibilities for website takedowns, for cease and desist measures, investor protection measures, naming and shaming, to give a view. So it's a good idea to stay within the confines of the regulated space. Right, so what's the main takeaways that I would like you to take home from my call? E-money tokens aim to be true digital e-money, not just an investment asset, and that is made possible by strict own funds requirement, strict redemption requirements, strict oversight. These issuers must meet high standards: reserve quality, liquidity, governance, reporting. White labeling is possible. It requires a bit of structuring, but it's nothing that is, it's already commonplace today with regular e-money. Access to central bank money is coming. And what I would also like to stress is that Austria's FMA is most certainly one among the most active supervisors when it comes to the European level. They bring much attention to specific problems or details. And as far as I can tell, they do provide clear and concise advice. Right, so MiCA finally creates a pathway for regulated European stablecoins at scale, but only for those institutions that design their products with bank-grade discipline. That would be my core message. And so I thank you very much for your attention. If you would like to stay in touch with me, you can scan this QR code and you'll have all the contact details. We do have used up a little bit more time than expected. So I would say we will close this part of the day, have our break, and I would ask you all the questions that you might have to Professor Torres, Wolfgang Haunold, Professor Piska, and me to take on those questions in our next part when we have our panel discussion. Thank you very much for your attention.